Oil. Let's go to the oil market. We got oil happening out here, folks.
Okay, we sure do. Wednesday, it is 10:21 right now. We get those crude oil numbers at 10:30 Eastern Time, EIA. We have crude trading at 51.23. So I jumped in here. We're going to take a look at some of the volatility trades maybe. We got oil trading at 51.22, looking at the January contract. We're going to have options of $51 is going to be our closest to line up to that.
It's not that bad.
It's not that bad. When I pulled it up originally, we were just there. I mean, we were just there, like, you know, almost at the break, literally. Yeah. So that would be the, and you'd have a little bit of a bullish bias, right? Because you got 21 cents of intrinsic value to the bullish side. Cost you $31. About 21 cents of that's intrinsic value, 10 cents in premium. And then on the flip side, you're probably going to be paying about, I was going to say $10, but a little bit more because you're out of the money from 51 to 49.50. So that's $45, a little bit pricey, but it's because you have this, and as I say, it's even ticking back down. Let's see, 29. So you're looking at $43. Okay. And the new ones line up with the same exact price. So all you're paying for is the extra time. So there's your bullish spread. So you can really see there's 51 to 52, 51 to 52.50, and you're paying, you know, an extra 5 pennies, right? 51.37. Bullish side's 36. It's a little pricey.
Yeah, it's going to be pricey today.
Especially if you got to move down, it's really pricey. And then 19. So you're looking at
55.
55, right? And if you need 55 cents of movement, and you need it away from 51, so if you get it to the downside, you need 70 plus cents of movement, right? It's a tough one. But, you know, you could always take one side of the trade. Like if you were bullish, that's not a bad trade to have exposure till noon, and you're getting in at 51.36, the market's at 51.20. Right. And you're capped out with inventory about to come in 7 minutes. And let's just see, I checked in, the dailies don't line up as well for volatility, but I mean, that's a nice out of the money spread maybe to the bullish side. Wow, they're putting in a little bit of premium as they should. But
look at that.
Yeah, so contracts trading 51.18. You don't start getting any value until 51.50, and they're still pricing it at 51.77. Now you can be the other person. You could sell that side of it, right? Yeah. If you want to risk 274
to make 26.
To make 26, and it's a tight market, which is nice. So there's a fair market. Look, I mean, it's sticking in 1 penny sometimes, which is nice. So you know that it's a fair market. When, which side are you on? That's what you get to decide. With the way oil's been moving, I mean, and you can always close it out.
That's the 230. That's right.
Yeah, so that's why, I mean, that's, you know.
Now, folks, put that one up again, the 276 to the...
yes.
Yeah. Now, I just want to show you, not in the oil market, but this is what happened when the guy in the gas market blew up. So, what you have here, right, you can see that 274 on one side, 26 on the other.
Sure.
Bottom line, that'd be what we'd be doing here, if we did this, is that you're selling the call. You're selling the right.
Yeah. And at least this one, I would even say to go further, like this is a capped loss, like as opposed to selling an uncovered call.
Oh yeah, no,
but this is like a 4-leg strategy where you at least you're capped out.
Right.
You know?
Exactly.
That's
exactly. And he wasn't capped out because it was in the futures market too. Yeah. But that's what you're talking. You know?
Yeah, huge risk to right, because you're absorbing that premium. I mean, that's
you're picking
people are paying for that premium.
You're picking up nickels in front of a steamroller, as our man Z would say in the den.
Right. Right. You know.
And it works for a long period of time, by the way. Okay. You know, it can work for years until it doesn't.
I mean, you can see the difference in the price. I mean, even though you don't have value till 51.50, there's still a 60-cent difference in where it's trading to where the market's trading, and that's the premium that you'd have to your break even.
Yes.
But we know how oil trades, and we'll get the numbers in 5 minutes.
Right.
And 60 cents might seem like a tremendous amount, but not when you have $3 of exposure, and you have till 2:30, and we're probably going to see oil pop at least 25 to 50 cents.
You already had Putin and MBS talking this morning. Putin saying, because there's some people that are already getting together for that G20, but Putin saying, he's happy with $60 oil.
I mean, just going back to 24 hours, we went from above 52 to a low of 50.31 to 52.50 to back down to 50. I mean, that's large moves for sure, and the market knows that. So we'll see. We get the numbers in like less than 5 minutes.
Big numbers.
Yes.
Welcome back, folks. Let's go over to those oil numbers.
We got them. Crude oil inventories rising 3.58 million barrels. I believe the estimate was only about an increase of 1 million barrels. You have gas inventories falling 764. Let's jump back to the charts, see where we're trading. Here's our oil, and it looks like we did have more than we thought in terms of what the anticipation. We were trading up at 51.20. We got to trade under 51 bucks, $50.83.
Look at that. That's a quick 40 cents.
It is a quick 40 cents.
Right.
And what did we say? The bearish ones, right?
That was the hottest one to come into
yeah.
line.
You had the daily one costing you like what 55 cents, but that was below 51. A lot of those 51 was going to be our max loss, right? Or where they would expire.
Right.
Yeah. So we'll see what happens. Oh, and there's the full breakdown. Yeah, so median estimate was about an increase of 1 million barrels. Crude was, you were saying API was a lot more than that,
6.5 last night.
Okay.
Yeah.
Cushing crude, 1.1. Pad 3, 5.8. 5.8. Look at that. I mean, that's probably
big.
Factoring in. And gas. So gas was looking for an increase, came in actually at under 764 for a draw.
Big numbers, man.
Yes.
And if we go over and we take a look at that CL1, this oil market, man, I'm trying to, you're in the winter anyway. I mean, we drive less in the winter. But that's normal because, there's a lot of bad weather around the country.
Such is life, right?
Yeah. But you can see, when you get this continuous contract up, we get some support here at the $50 level, but man, this 45 is sticking out like a sore thumb.
Oh, definitely. I mean, we're trading at 51. We could be at 45 in 2 hours.
Seriously.
Just, I mean, look at that.
Look at that.
Every day. Is that? No, it's a weekly. I was just supposed to think, is that a day? I mean, even a week. So what are we back to right there? June of 16?
Yeah, June of 2016.
And I was just going to point out how wide all of these bars are. Starting here, you have a $5 bar, right?
Yep.
You have a $5 bar. You have a $7 bar, $7 bar.
Yep.
So that's in a week.
That's dangerous.
It's Wednesday, and we're only at a $2 bar.
Well, what's wrong?
Yeah, we got $3 to $5 to go.
Wow.
We'll see. And let's just jump back one, because this is a delayed, I think, right? Is that delayed?
That is delayed.
And
there we go.
So 50.69 as we jump on there. We're already 30 cents below that level. And it's 3 minutes. Now, you can see why they were charging that type of premium till 2:30, because we just got 70 cents movement in 3 minutes. So we'll see what happens.
Big numbers, folks.
Cheaper gas. I like it.
No doubt. Yeah, no, we all love it.
I do. $50 barrel oil.
Yeah.
Sign me up for that.
Totally.